the best time to trade is when the market is the most active. If you just started trading, it's important to know what currency pair you should trade. Let's start with the major currency pairs versus the minor currencies. Minor currencies, which is the euro to Japanese pound, the euro to Japanese yen, British pound to Japanese yen, British pound to Canadian dollar, Swiss franc to the Japanese yen, euro to the Aussie dollar, and New Zealand dollar to the Japanese yen. In minor currencies, you'll see that often minor currency pairs are the most second traded in the forex market. Minor pairs that do not include the US dollar, but do include at least one of the world's other three major currencies, which is Japanese yen, British pound, and the euro. Let's not forget that it excludes the dollar. Major currencies will have the Euro USD, British pound to USD, USD to Swiss franc, USD to the Japanese yen, Aussie dollar to USD, New Zealand to USD, USD to CAD. Major currency pairs have the most liquidity, most manipulated, such as the US dollar. They also attract lower spreads and easier to trade. Major currency pairs are consistent and predictable and easier to analyze. Understanding correlation. In Asian session, we have the Japanese yen, the New Zealand dollar, and the Aussie dollar are active. In the London session, we have the British pound, the euro, and the Swiss franc is active. In New York session, we have the USD, British pound, CAD, and gold is active. Here are some of the mistakes that I made when I first started trading, which is I started with the British pound to USD, not knowing that both are active in the New York session. Euro to JPY are also both active in the London session. The Aussie to New Zealand dollar, both are active in the Asian session. You should have a plan, and your plan should be simple. It's to stick to one instrument. An instrument meaning a pair. For example, if you decided to learn the piano, just stick to learning the piano. Why learn the piano and the drums? Second is to do research on economic fundamentals based on that pair. That would help you to analyze trades very easily. 3 is to stick to one session. By sticking to one session, that will help you to eliminate many of the losses by knowing which pair is active and which pair is not active in your session. That will help you take advantage of the market. Market trends and how does the market move? In an uptrend, when price is trending up, it's always creating a higher price. In an uptrend, price will make a higher high and a higher low. When the price makes a high, the probability is higher to retest. For example, we have this uptrend, and as you can see, we made a higher high, and then we pulled back, made a higher low. And then we made a higher high, and then higher low, and then a high. And then we could make a higher low again and continue up. When price makes a high, the probability higher to retest. The probability of it to pull back is higher to retest this high and go beyond. Same thing in this scenario. We made a high, we pulled back, made a higher low, and continued to the upside. In a downtrend, when price in a downtrend, it's always making a lower price. In a downtrend, price will make a lower low and a lower high. When price makes a low, the probability to retest the low is higher. In a downtrend, for example, we have this downtrend here. We made a low, and then we made a lower high, and then a lower low, a lower high, and then a low. Same thing in this scenario. Price came down, we made a lower low, and then a higher low, and then a lower low. In consolidation. Consolidation in forex trading is a period when the price of a currency pair remains within a specific range, without making any significant movements in either directions. Trading in the range, the probability of success is very low, as majority of retail traders lose. Breakouts and consolidations. The best thing to do is to wait for a breakout structure. Taking a potential risk can turn into a loss and affect your psychology. When a price breakout from a consolidation, the probability of a retest is 50 to 60% of correcting the move after a retest has been made. In this scenario, we have an uptrend, a consolidation, and a breakout. After the breakout, we made a retest, and then at that case, we have 50 to 60% to retest this high again and possibly make a high. The plan. Don't trade consolidation, as it would kill you. It will drain you mentally and will affect your psychology and will put you at a bad mental state. the best thing to do is to avoid it. Trade with the trend. If you're scalping, don't swing. And if you're swinging, do not scalp. A trading plan is a set of rules and guidelines that shapes and defines your trading behavior, financial goals, money management, risk management techniques, and criteria for opening and closing positions. It allows you to anticipate different scenarios in the market based on past experiences, and it gives you direction so that you can make informed decisions. A good trading plan should include your entry points, exit points, risk management, trading strategies, and emotional control. A trading plan should be researched and written document that guides the trader's decision. So these questions can be subjective. Just answer it based on your own preference. So let's start with the first question. What market session do I trade? You could choose what market session you're trading, which pair, what time is the session. This could be from 6 a.m. to 10 a.m. What trading strategy am I using? This could be like scalping, swinging. Are you intraday? Are you long term, short term? Are you trading news or no? Are you holding over the weekend or not? I'm not gonna get into depth, but you should know like your entry trigger, like what triggers you. Like, do you get triggered based on FOMO, fear of missing out, or do you get triggered based on like what makes you enter a trade? You want to write that down. What am I looking for to take a trade? So the first one is what makes you get into a trade. The second question is what am I looking for to take a trade? Are you looking for an uptrend market to take a buy as support? Are you looking for a downtrend market to take a sell at resistance? Or are you doing both? Or you're counter trending? Are you selling in an uptrend market and you're buying in a downtrend market? When should I secure? Are you securing based on previous historical price levels, or securing based on percentage, or are you securing based on pips? How many trades should I take in a day? You want to define how many trades that you should take in a day. Is it going to be one? Is it going to be two? When to avoid a trade? When do you think the best time to avoid the trade? Is that like on a holiday? Maybe news day? Which news is it? So risk management section. Placing stop loss or a mental stop loss. Now, if you say you're placing a stop loss, that means every trade that you enter, you should have a stop loss. Because the moment you lose and you don't have a stop loss, and in your plan, you said that you're placing a stop loss, you basically broke your plan. You did not follow it. Okay. How much are you willing to lose? That's the first question that should come also to your mind before you take a trade. How much are you willing to lose? Is it a certain number of dollars a day? Is it a certain percentage a day? Is it certain pips? What is the risk to reward ratio? Is it 1-to-1, 1-to-2, 1-to-3? How much risk per trade? Are you risking 1%? Are you risking 5%? 10%? What is the maximum drawdown that you would want to see? Drawdown meaning the max negative dollar amount that you saw negative. What is the daily, weekly, monthly goal? You want to write down like how much you want to make a day, how much you want to make a week, how much you want to make a month. When do I cut losses? I'm not going to answer this one. Again, I want you guys to write what you think. There's no wrong answers. Okay, there's no wrong answers. You just gotta, especially if you're starting out, it's best to have these down, because later on in your journey, you're gonna want to change some things. You're gonna look back at this and be like, this doesn't make sense. When do I secure profit and let a runner? I'm not gonna answer that too. What time frame will I focus on? Are you focusing on the higher time frames, lower time frames, such as like the 15-minute, the 5-minute, 1 minute, or are you focusing on the daily, the 4 hour, the monthly, weekly? Are you going to be using indicators or signal providers? Are you going to be using trend lines, support resistance? Are you going to be entering based on setups? or price action. I would have to make another video about the price action versus setups. Mission and rules. Why you want to trade. This here you want to be completely honest with yourself. Why you want to trade. Um, if you write down that you want to trade because you want a Lambo or Rolex or get rich quick, then I doubt you watched this whole video in the first place. But let's see why you want to trade. Could be financial freedom, or you want to quit a job. What is your goal? Your goal should be to achieve success in trading the financial markets. Right? Now, rules. And you want to write this down. I have no idea what the outcome of any individual trade will be. 2, today could be a negative day. 3, accept the loss of the next trade financially. For daily rules, review a personal journal entry twice a week. Read prior day's trade journal. Review prior day's trade. Check economic data. And always remember, there's always another day.